Good morning, everybody. It's just on 11 o'clock now, and thank you for joining us for the latest Solder Brothers SB2 webinar. We've just got a few people still coming through the waiting room lobby, so if we'll wait just 1 minute further and then we'll make a start. Thank you. Okay, we'll make a start. All right. Good morning, everybody, and my name's Greg Taylor, Director of Equities at Solder Brothers. Thank you for joining us this morning. This is the third episode in a series of monthly webinars that we're doing around the Solder Brothers Emerging Companies Limited Fund, SB2. And the whole purpose of these forums is to take you on a bit of a deeper dive into the investment process and the thinking that goes behind the construction of the portfolio, and just hopefully gives you a little bit more colour on the various considerations that we undertake and the process which results in the underlying portfolio. And today we'll be talking about something that's quite topical over the months of October and November, and that's the annual general meeting season for our ASX listed companies. And this comes off the back of the two previous webinar topics, which firstly we spoke about the relative valuation of the small cap market, and I'll touch on a couple of reference points today in the presentation on that. And then also the second webinar was focused on the annual result reporting season, which is over the sort of the months of July, August, September, and we spoke through the process and insights from that. So again, appreciate everyone's interest, and there is a Q&A session ending, and I'll allow a good 5 minutes at the end of the presentation for that forum. But to make a start, a copy of this presentation is available on the ASX, and please feel free to contact us directly if you'd like a copy emailed to you. What I'm going to do, the intention today is to there's a number of new people on the call today, so I will start with just a bit of a recap of the Solder Brothers equity capabilities and the SB2 fund, and then we'll quickly jump into the annual general meeting season and how we as an investment team use this opportunity to sort of influence and construct our portfolios. So a few high points here. So Solder Brothers, you hopefully becoming familiar with, is global fund manager with over $3.5 billion of group assets under management, and they're spread across the asset classes of property, credit, and equities. And obviously today we're talking about the equities, and more specifically about the Solder Brothers Emerging Companies Limited Fund, which is a listed investment company on the ASX under the code of SB2. And just reiterating, the mandate for this fund is to invest in Australian companies with a market capitalisation of less than $500 million. So we must start a position there. So genuine small cap fund. And what I'm really fortunate to have is, a very large and proven investment team that helps with the construction of this portfolio and the ongoing management. Real briefly on myself, I said Greg Taylor's the lead portfolio manager. I've been fortunate enough to be an institutional investor in Australian small cap equities for over 25 years now. So that comes with some bruises, and some experience and insight. And again, hopefully this webinar series gives you the ability to share a little bit of those learnings over that time. Pleasingly, and I'll quickly turn over to the recent performance of the fund, but SB2 as a fund is greater than a 3-year track record now, and you'll see on the following slides that we've had very strong performance throughout that period, both absolute and relative to the market in what has been pretty difficult times for small caps. And more recently, the 12-month performance for the fund has been a 25% return, which is, again, I think pleasing for all stakeholders. But I generally continue to believe that where we are in the cycle for Australian small caps is where there's still a long way to go. We're starting to see some green shoots, which I've spoke about pretty consistently over the last 6 months, and that's encouraging. But as we'll talk about the relative valuations further, there's still a long way to go. But again, really good to see a little bit of positive sentiment and increased liquidity coming into the Aussie small cap market. Here's a snapshot of the performance. Again, these numbers are to September. We're obviously getting very close to the end of October. I'm pleased to report that performance continues to be positive during this period and relative to the market. So, what we see here is that I spoke to those 12 months, and since inception, consistently outperforming the market, which is definitely what we're looking to do. And again, everyone's more focused, and we should be focused on the future performance opposed to past performance. And the key drivers I continue to see is that the relative valuations of small caps versus large caps is very attractive in small caps' favour. And this, as we're moving into this interest rate cutting cycle, which is proven to be a key driver of small cap performance over many decades. So I really think we're only early in this cycle, and that's from a top-down perspective. But as I move over here, from a bottom-up perspective, it's still very much the case as well. So what we've got here is a bit of a snapshot of the SB2 portfolio. And what you expect to see is a portfolio of circa 25 investments. And what I've noted here is a couple of those top investments, top 5 investments, to give you a flavour for what we invest in. And it's a bit of a mixed bag, as is always the case with a portfolio. But I'm really pleased to report that the top 2 holdings in AI Media and Alfabs have had quite strong performance of late, and especially AI Media, where I've done quite a lot of content around our strong conviction in that company, which is the single largest holding of our fund. And again, I believe that's got a long way to go. And on Alfabs, it's probably one interesting. 2 of the team members today, both Frankie and Dane, are up in the Hunter Valley doing a site visit at Alfabs' facility up there and getting an update on the business and a deeper understanding of the drivers of that business. But as I continue to look at the underlying fundamentals of Alfabs and its valuation, it's a very high conviction holding. And what I like as an institutional small cap manager is looking for undiscovered companies that are not well held by the broader market. And AI Media was a classic example of that. Very low institutional and actually quite low awareness in the broader small cap market. Over the last sort of 6 months, you've seen that the focus really move on to AI Media, and you've seen the share price going from 30 cents to 90 cents, which is great. I think Alfabs is in the early stages of that and has the same sort of upside potential that I just articulated then. And so Alfabs is a civil engineering and construction business, but also does some asset hire into the mining sector, and only recently ASX listed. And again, what excites me and would make most people nervous, but it was, we were the only institution that invested in this company in pre-IPO and then doubled that investment into the IPO. We're starting to see some other institutions join us on the register and a broader awareness. But I think once people truly understand the strengths and valuations of this business, the upside's significant. So really excited about that. But if I look at a couple of the other top five there, OFX Group actually had a disappointing half-yearly update only this month. The power of having a diversified portfolio is that it hasn't hurt performance materially, but it has been a little drag. But I was, again, call it a bit lucky, but we did sell quite a bit of stock at $2.50, and then ahead of the softer result they reported, over a third of our holding, and it dropped back down to about $1.40 following that update, and we slowly entered back into the position down at those levels. So this active trading of the portfolio is really big part of what we do. Our sitting and PYC have been quite good as well. But just real quickly before I move on to the AGM aspect, why I'm so excited from the bottom up around the portfolio at the moment are the metrics that you see here on this page, and they continue to be. These get updated monthly, and but over my 25 plus years, the opportunity to find an individual stock that was growing at 20% and had a strong profit margin and was on mid-single digit PE would be a great outcome. The fact I've been able to construct a portfolio of 25 holdings that the average portfolio metrics reflect that is really cause for optimism as we roll forward. So what you're getting here is a diversified spread of small cap industrial companies with good growth, good profitability, and really reasonable valuations. So, and the last aspect, which I continue to talk to, and I think it's really important, is that SB2 currently does the share price trades at a discount to its prevailing post-tax net tangible asset value, or its underlying asset value. And we've put in some measures in place to help close that gap. Performance is a key one, so that's helping. We've also got a buyback in order. We've got our own AGM coming up in the next month, where we'll give an update around dividends. But as it stands at the moment, we've got this opportunity to enter SB2 portfolio at a 30% discount to the underlying post-tax asset value, which is creates a really interesting risk versus reward. Just a quick note on the buyback. We've had a buyback in place. We've been very active in that. The anniversary just came up, and we decided to change the buyback broker, and as a result of that, it necessitates a 2-week pause of the buyback, and that ends in early November. So if you might be thinking the buyback seems a bit slow over the last week or so, that's purely because of that dynamic, but nothing fundamentally has changed with our strategy there, and continue to believe that'll be that, as well as marketing initiatives here and continued strong performance should be key contributors to the onward closing of that discount. It was at 40%, it's at 30%, and now we want to continue that trajectory. All right, so on to I guess the sub focus of today's webinar is all around the AGM season, annual general meetings. And look, I'm not here to educate you on what an AGM is, and I think most people have that, but it is quite unique. The small cap, especially sub 500 mil market cap, small caps, the board construct, the AGM process, and the voting is somewhat differentiated to that of a typical ASX 100 or larger cap company. But just to recap, an annual general meeting is held typically sort of within 3 months of the release of the full year results of a company, of an ASX listed company. And what they do, the board gives the opportunity for the board to front investors. A lot of it's done digitally these days. It used to be in a physical forum where you get some sandwiches and a coffee or a cup of tea, but these days it's largely online. But the board and the management team present their previous year results and also talk about future results. But they also it's a really interesting year as a fund manager or as an investment manager, because now you're 3 months, or in some instances 4 months into the trading year of the new financial year. It's the first data point that the company often speaks about their performance year to date, and in many instances gives an outlook for the full year at the AGM. So a lot of data points and insight to come from this AGM reporting season, which is great. But ultimately, beyond that update from the board to face and provide a forum for investors, both retail and institutional. Also, there's a number of resolutions that are typically put up to shareholders to vote for, approval of the remuneration of the business and any other corporate uh, elections around electing directors or remuneration packages around those directors. But where it really is different between small and large caps is that typically a profile of the company uh, in small cap land, they have a good and some good breadth to their management team, but typically they look to their board to supplement the management team. So what you're looking for from a small cap board is to have active directors that can add value over and above independence and governance and oversight of the business. And so you're looking for people with you know, capital market experience to be on your board. You're potentially looking for a deeply connected director on the board who can open up doors and new business opportunities for the business, and just also some sort of functional experience as well, so they can be a genuine sounding board for the management team. Whereas in large caps, typically, yes, there's a little bit of that, but you're in a large company such as one of the big four banks or a Telstra or a BHP, they've got very deep executive teams and capabilities. And from their board, they're not necessarily looking for operational support for the management team. They're really are there for independence and governance and those matters. So really different dynamic. And again, typically a small cap board might be 3 directors on average, 3 to 4, whereas the large cap boards can get pretty well, widely in sort of 6 to 8 or even more directors. So smaller, more hands-on boards in small caps. And again, the small cap AGM, they tend to be a little bit more focused on those operational and strategic discussions, whereas a large cap AGM will be really focused on those governance and independent board oversight matters. So personally, I find the small cap ones a lot more interesting, but you probably get better sandwiches and biscuits at the large cap ones, I would suggest. The other dynamic is, because it's such an governance is critical, and I'm not underplaying the importance of independence and governance. In the large cap land, there's quite a number of dedicated proxy advisory firms. So these are independent research firms, sorry, that review the resolutions that a board's doing, review the performance of the board and all the governance. So that's effectively outsourced and done for the shareholders. Whereas for small caps, that's not the case. So it's up to the shareholder to really understand the various considerations of the board and what's being proposed and what's seeking a shareholder vote on. You need to do that yourself, and we do a lot of that. And I'm quite fortunate, and I think SB2 are quite fortunate that I actually have quite a lot of personal ASX board experience myself. So I've sat on over 5 ASX boards over my 25 years experience. I don't sit on any ASX boards at the moment. But over that time, I've been a chairman of an ASX company. I've been head of audit and risk. I've been independent member. I've been an executive member of the board. So I think having that experience and being on the other side of the fence is really insightful and helpful when you're dealing with the AGM and board matters, because you're not coming from a purely sort of investor focus. Well, you absolutely are, but you can come with a pretty balanced perspective on what's reasonable and maybe what's not reasonable. And in addition to that, um, I've again got the luxury of also oversee a number of private or unlisted companies, and we sit on the boards of those as well. So a lot of insight and industry knowledge and experience comes from that as well, over and above what a typical passive investor will do. Another dynamic for SB2 is, of course, we are a pretty meaningful investor in this sub 500 mil market cap space. In many instances, we'll own over 5%, and in some instances, over 10% of the company. So our vote is actually really important, and quite often we engage pretty heavily with the boards of our underlying holdings to share our perspectives. They're not always right, and all we ask is to be heard, opposed to ignored. And I'll talk through a couple of examples of that. But so basically, I would suggest, because of that background and the large representation we have on the register, we spend a lot of time on the AGM process, understanding the resolutions, understanding the board's performance, the board makeup, and using this opportunity to use our influence in the market to ensure that we're getting the best governance, and all stakeholders of our underlying portfolios are being represented appropriately. So, it's always a bit of a sensitive matter, and I could sit here and talk about some companies in our portfolio that have got great governance, and then others that have governance that probably needs some further evolution and improvement. But it's always a bit sensitive. So what I've done here is spoken about an anonymous company in the small cap universe that just gives an example of what I think they didn't handle the corporate governance and shareholder communication process well, and that tangibly plays out in poor share price performance and disassociation with their shareholder base. And so this company, which we'll call Company X for this exercise, they had a management incentive scheme in place, which again we're big supporters of. We always philosophically around incentivizing management to get good outcomes for all stakeholders. But in some instances, that those incentives don't align with those of the shareholder interests. And the worst case scenario is when the management gets a big bonus or gets what they think success, whereas the underlying shareholders you either see negative share price performance, or the shareholders don't align with the view that the management have been successful. And these are core to the scenario you want to avoid. And in this instance, this company, and they had some targets in place just on one single metric, which they hit, which, funny enough, the way you incentivize people is the way they behave. And but them achieving that target, they actually missed the public market's expectations around other key metrics. And what this saw was in a meaningful share price fall, greater than 25% off the back of this dynamic in the matter of days. And what you've seen is that company get pretty heavily voted against by its shareholders. Many shareholders just exited the register and wouldn't put up with that misalignment. And so it's just a small example of the importance and of this governance aspect, and making sure the board and the management teams of these ASX listed companies communicate and align with their shareholders around mutual aspirations and expectations. And the AGM's the key forum that this occurs. So really important part of the annual cycle of following ASX listed small caps, and it's one that we spend a lot of time at. We'll vote on the resolutions. We'll do a lot of work ahead of that time. We'll give feedback to companies ahead of the time. We'll attend the AGMs, and we sincerely make investment decisions based on the quality of governance by the companies, consistent with that process. So that's all for today. I'll pause there. Again, I appreciate your patience and for listening to that. I hope it gave you a little bit more insight around small cap investing and how we do it at the SB2 team. You've got my contact details here, as well as our head of distribution and partnerships, Yossi. We encourage ongoing dialogue, so please reach out with any questions. But to that end, I'll pause now and hand over to Megan and see if there's any questions in the chat group, or if there's not yet, you have the ability to add any questions there.
Yes, we've got a few questions come through, Greg. So the first one is, can you touch on any the unlisted assets and any views on potential value creating events?
Yeah, no, good question. So within the portfolio, we do have a small number of unlisted or private companies. what I'll say is that the direction we're going and the feedback we've had from, again, this importance of shareholder communication, we're a listed company as well, so all these metrics and um, you know, theories are equally important for us. But so we're looking to reduce the exposure. Again, it's sub 20% and getting smaller due to the relative performance. We're looking to reduce that over time, but so as part of that process, there's probably three key holdings that make up that unlisted component. And what I'm really excited about and really pleased to report is that each of them are performing well and are in various stages of strategic discussions that would result in an exit of those companies. And the valuation approach that we apply is very conservative. We sort of only increase the valuation if there's a large independent capital event, and that's not something that we've done recently, which means we're carrying those investments. So the investments, we've got a fintech business called Ipsy that's doing extraordinarily well. It's got some really valuable IP and is extremely well placed in the payment sector. And we're in a number of strategic discussions around that at valuations meaningfully higher than the carrying value. But that's a great asset, which is just switching to profitability, got again some real deep interest. The risk is to the upside on that without question. Then another meaningful one is it's a business called Pelican Group, which is an asset management infrastructure software business. It's a long held investment. That's a global business. North of 30 million of revenue, highly profitable, and again had quite a lot of strategic interest. And we're starting to think through what that looks like. But again, the carrying value for that business is very conservative relative to what could be achieved in that event. So that's just a little bit of a snapshot there. But the overarching comment is really comfortable with the carrying valuations. I look forward to the moment where I'll give you a positive surprise on maybe a transaction or a meaningful uplift in those valuations. But at the moment, we continue to hold them very conservatively. But I'm not nervous at all about the carrying values.
The other question is SB2 in a position to return capital to shareholders via a dividend?
Yeah, great question. And our AGM is next month. And that is very much at the forefront of the board's mind. I can't comment. The board hasn't made a decision yet, but what I can comment on is that it is always been the intention for SB2 to be dividend paying. And now we've got that 3-year track record. We've got some good franking credits banked up. And the SB2 board is sort of actively considering that exact point, and we'll update the market next month at the AGM.
I think that's it. We've answered the other questions that had come through during the. Oh, sorry, OFX. OFX had a pretty bad update, which saw it lose all its gains this year. What's your outlook on the company going forward, considering you still have it in the top 5 holdings?
Yep. So I spoke a little about that a little bit in the presentation. So again, I'll call it good luck, but we did bank a good chunk of those gains before the update. Like literally, and again, sometimes you do the work, but sometimes you're a couple of days early, and sometimes you're a couple of days late. But we're a couple of days early in this instance, so we actually had sold a good chunk of our holding before that update, and then the update came, but it definitely wouldn't have been a top 5, and arguably maybe not even a top 10 holding when that update came through. But what we have done is slowly, and only less than the amount we sold, slowly started rebuilding that position at current levels. So our overarching view was they actually had, ironically, the broader market view was very positive about the update, ahead of it, expecting the market dynamics to be favourable for them. And they spoke to having 4 of the 6 months for their half year was very very strong. And then just around the interest rate decision in the US, in the back half of their first half, 6 months result, saw a lot of people sort of just holding. This is now a corporate foreign exchange business, so it's not a retail business. It's not people going on holidays and you know exchanging their currency to go to Bali. It's corporates that are using their services and software for their forex requirements. And the feedback on the softness of the result was off the back of with the US changing or waiting for the US interest rate decision. A lot of companies sat on their hands around making decisions around capital expenditure. So everyone's quite anxious to see, they'll provide, next month they'll have their full results and provide more color on that. But what they did do is provide a full year guidance number. And if you look at with quite a level of conviction, and if you look at what's implied in that second half performance of the company and you annualize that, I, you know, I think there's cause for optimism. So hence why we're continuing to be comfortable in holding the name. It's a quality management team, a quality global business with good growth and good industry dynamics, and it's now very attractively valued, but now to a single digit earnings multiple, and it's a lot better quality business than that. Emotion has justified the share price being pushed down. So yes, still in the portfolio, and didn't hurt us too much, but I think it's upside from here.
Okay, that's it. Thanks.
Well, I really appreciate the questions and really appreciate the people taking the time. Again, welcome the opportunity for people to reach out directly with any follow-up. We'll be posting a recording of this session both on our website and on various sort of platforms. So you can share that with any others. But thank you again, and we'll have one more session before the end of the calendar year. Cheers.